can't, fathom politically is I don't want the recession, right? But the recession is necessary because of all the things the government has already done. It was a phony boom. It was their bad monetary and fiscal policy that means that the recession is necessary. The recession is the market's way of curing the economy of all the problems that it has thanks to what the government has done. So I'm not glad there's going to be a recession. I just know that we need one because of what they did. Now, if we didn't want the recession, then we shouldn't have had the policies that led to the phony boom, which I was against. I spoke out repeatedly in the early part of this decade about why Alan Greenspan and George Bush's policies were going to lead to a disaster. I didn't want those policies implemented. I didn't want them inflating the bubble. But since they've already inflated it, we can't avoid the fact that it's going to burst. If we're going to have a bust if we have a phony boom. But they want to act like, well, Peter Schiff doesn't want to do anything. He doesn't care. Well, what I understand is that anything they do is just going to make it worse. So why would I want to make the problems worse? Why would I want the government to come in and interfere with the free market's attempts to rebalance the economy? Because if we don't rebalance the economy, we're never going to have a viable economy. We're never going to have real economic growth. It's just going to be, an illusion. And when I wrote, the first book in Crash Proof, and people are now saying, oh yeah, okay, Peter Schiff predicted the economic crash, as if the economic crash has already happened. It just started. I predicted a much bigger crash that is now playing out, and I think that the crash has certainly begun along the lines that I described that it would. But it's a process. It's unfolding now before our eyes. And unfortunately, the government is doing all of the things that I was afraid that they would do. If you read in Crash Proof, I wrote what I thought the government was going to do when the housing bubble burst and we started to see the bankruptcies and the foreclosures. I knew that they would not sit by and let it happen. And everybody in Congress or people on I go to these financial shows, they say, well, we had to do something. We couldn't do nothing. But why? Why couldn't we do nothing? Sometimes doctors take a Hippocratic oath. Sometimes doing no harm is better than doing harm. But the politicians don't want to be perceived as not doing anything. Even if what they do makes the situation worse, at least they want to show that they're trying to help. And in the short run, I knew, look, if they print enough money, right, they can slow this thing down. But at what cost? Right, we're probably going to have a increase in the GDP in this most recent quarter, and everybody is going to say this is fantastic. We solved the problem. Recession over. Crisis averted. Of course, now we need all this new government to try to make sure it doesn't happen again. But what is the cost of getting a couple of quarters of positive GDP? And where is that positive GDP coming from? It's coming from massive amounts of spending financed by even greater amounts of debt. And so where are we now as opposed to 2008? We've got trillions and trillions of dollars of debt that we didn't have. We're more indebted now than when the crisis began. There is no deleveraging. We levered up even more. Now, there has been some deleveraging in corporate America and but it's been more than offset with the extra debt by the government. And of course, the financial industry remains highly leveraged because the government isn't allowing entities that were too leveraged to fail. It's bailing them out. It's propping them up. And it's allowing them to continue the very practices that led to the problem. So we're buying some time. But at what cost? Ultimately, when interest rates start to rise, and there's two real predictions that I made in Crash Proof, major macroeconomic type predictions that haven't really unfolded. One is on interest rates and the other is on the dollar. The dollar is falling, but it hasn't really collapsed yet. It's still higher than it was at its low point in summer of 2008. It's getting close to making coming close to that record low, but it hasn't really fallen apart. And interest rates, they're not at their absolute lows, but they're still very, very low by historic proportions. What's going to happen in the very near future is that the dollar is going to fall rather precipitously. And that will cause interest rates to rise and will cause consumer prices to rise. And they'll rise very significantly. And that's when the real economic collapse is going to begin. You know, and just now everybody thinks it's over, and I'm trying to say, wait a minute, no. You know, the events have been set into motion, but we've simply postponed the consequences yet again. You know, we did the exact same thing that George Bush did and Alan Greenspan. You know, when they intervened in 2001 and 2002, because they didn't want a recession. Back then, I was saying we need a recession, not because the recession was good not because it was fun, but because I knew that there were a lot of imbalances that had been built up over the NASDAQ bubble years. I knew there was a lot of capital that had been misallocated. I knew there were a lot of companies that never should have been formed that needed to be liquidated. And I knew that the process of doing that, of reallocating labor and capital, was going to necessitate that there be a recession. And, you know, so I wanted the government to let the recession happen. Not because I thought it was a fun thing, because I knew that if they tried to interfere, they would only make it worse. So get it over with. I like ripping off a Band-Aid. You know, don't peel it off slowly, just rip it off. And